Sudeep, what did the Fed have to say? What are they projecting for the economy?
Evan, I've got them right here in my hand.
Good.
They're showing their projections for growth are a bit higher than they were in January when they last made projections.
And what does that mean?
And of course, their projections for the unemployment rate are a bit lower. That means that based on the last few months, they actually are a little bit more upbeat about economic growth than they were earlier. But the big issue here, which I see, is their forecast for inflation did go up somewhat significantly. In January, they projected inflation of 1.4 to 1.8%, and now they're projecting 1.9 to 2%. So that's the high end of the range. The Fed, of course, is looking for inflation around 2%, and that could be one reason why you're not going to see a lot of enthusiasm from Fed officials out there for another round of easing, for QE3, for any other signals, because if this inflation outlook looks this way, then they're going to be a bit more cautious than they would be otherwise. But you don't really see any sign of concern in their forecasts about the growth picture as we've been worrying, and as you might have picked up in the statement earlier.
Now, the markets are actually trading kind of flat off of this, or at least from what I can tell right now. And because the markets are trading flat, they seem to say that the Fed kind of signaled the direction here. The Dow is can't really tell us what's going on. It's down a little bit versus where it was. But if we can go to the S&P, where you see the full effect of Apple's stellar earnings, S&P's been trading kind of up between, say, 15 and 17 points for most of the day. Right now it's trading up around 16. So does this mean the market's interpreting that QE3 or the twist or whatever you want to call it is still on the table, although not super likely in the near term? Would that be a good reading of it, Sudeep?
That would be a good reading of it, and I think we knew from the statement earlier today that the Fed was kind of inching toward this stance where they might be able to take action, but it's very clear from these latest projections and from the statement earlier that they're not inclined to do anything right now, both because of the inflation picture and also because the signs of any slowdown are fairly recent, and they're not going to pull the trigger too quickly with a problem like that.
Now, do we have any, I don't know whether you have the data yet, the underlying data that talks about where various members of the FOMC came out with regard to future easing and the timing of either future rate hikes, rather, in the future. Do you have that information, Sudeep, or that's not part of the package that came out?
We do have a little bit of it. If you look at where they are, it's actually a fairly clear split right now. 7 policymakers out of 17 see policy tightening in 2014, as the statement indicated. 4 of them see it in 2015. So there's still a fair number of members out there who are a bit more concerned about the economy and might be inclined to push that policy guidance out a little bit further. And there are 6 members who see it before the guidance in the forecast, so they think tightening should occur in 2012 or 2013. The most important, of course, Evan, is the Fed chairman, and we don't know yet where he lies. They don't tell us in these forecasts where he is, but we'll probably get a sense of his tone at the press conference in a few minutes.
Now, Sudeep, should I interpret this 2014 or 2015? I mean, most of us have trouble predicting what's going to happen in the markets tomorrow. And as smart as all the people on the FOMC may be, it's a bit of a joke that some of them are talking about tightening in 2015, isn't it? I mean, we're not even halfway through 2012.
It can be perceived that way, but the real thing you should take away from this is how confident they feel about the recovery. If you have more members over time looking at 2015 for policy tightening, that would just show that more of them really are concerned that the economy isn't picking up in any reasonable fashion. And it's not just the matter of getting reasonable growth here. You also need the unemployment rate to drop a lot more from where it is now. And we're talking about below 7% before people are going to really feel like they're on this path toward a clear, sustainable improvement in the labor market. And we're obviously far from that right now.
Yeah, and I just note, Sudeep, that the dollar strengthened a bit. Treasury sold off a bit. So everything is kind of more or less, at least in the markets, going according to the plan as you laid it out.